Okay, what's up, folks? This is again January the 1st, 2024. So I'm doing my second script for the day. The first one I was doing this live. This second one I'm just doing as a recording. Still going to try to get through it fairly quickly, but not a lot of folks are showing up for the live, so I just do it as a recording. But when I do the lives, I want people to come on and interact and that kind of thing. So not just come on and look, but just come on and interact. So instead of doing ES, I think we will do, let's see, I want to do, not here. I'll go to the mess desk. 1 minute time frame. But I'm just gonna make a quick script on another chart. Again, this is just repetition. This is getting that muscle. This is getting that practice, that repetition. So, SPY. Let's see. But the SPY should be very similar to the ES, so I don't want to. I mean, identical, right? Let's see. Let's do this. Let's go to window, horizontal. All right. We're going to unlink that. Over here. Bam, 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 bam. 1 minute time frame. I think I have multiple. Yeah, got multiple time frames going on this one. I mean, I know that they're pretty much identical, but I don't know for a fact that all the bars are identical. So, I mean, but it looks pretty close though to the ES and the SPY. Yeah. Yep. Just go here. ES. That also is a multiple data stream. Say multiple data streams. I have 3 data streams going on with this, so I don't want one with 3 data streams. I want one with just like 1. So let's copy this. Tradestation has me nervous about copying and pasting charts, because if you copy and paste a chart under the wrong settings, wrong situation, whatever, you're starting to get a system that is screwed up, and you have to delete Tradestation from your computer and then reinstall it. So I used to do a lot of copy and pasting. Now I'm kind of nervous about doing it. So that's why I don't do a lot of copy and pasting. But there is another copy and paste. Put a window, range vertically, and then make one of these ES or at ES. I should. And then both of them on like 24-hour session. Okay. All right. So zoom in a little bit. Now we do a global positioning. We're gonna go to that bottom wick there, and that bottom wick there. If we come over to this screen, now let's compare that bottom wick to that bottom wick. Next bar, that bar. They're not identical, right? So look at these candles on ES. So futures, see those candles? They look like dojis. I mean, just like nobody dojis. And then on this chart, on the SPY, they actually have bodies. Okay, so interesting. So I think what I'm gonna do is I'm gonna make a script for the SPY, and because I've been doing it for the ES, right? You see all this is marked up. I've done it for the ES, and this is what I did earlier today. Had these nice green entry signals for the 1 minute time frame on ES. Now let's do it for SPY. Go over here, open the development environment, and let's see. We're gonna remove the ES January the 1st 1 minute time frame 1. And put this over here. All right, and then there's that. Now we open up. We're going to start a another show me. It's going to be SPY 101 24. Yeah. Okay, and now I'm not going to do the same code that I did for ES. For ES, I did a combination of, matter of fact, I don't even think it would be the same on this chart. But for ES, I did a combination of, it was a script that showed like 3 bars in sequential fashion with lower highs, and then I did something like that. So I'm not going to do that this time. This time I'm going to start from here. So this is our low on the higher time frame. That's our low. And again, I want to try to capture like these guys as a low. Bear, high volume bear, bearish candle, right? This here is a doji right around the 6-period moving average. It's a long wick doji following some wicks. Yeah, there's a lot more wicking and action going on here on the SPY than it was for than it was for ES. All right, let's see here. Bearish candle, high volume there. Higher volume bearish candle. Higher volume bearish candles. Higher volume bearish candles. Seems to be a common theme. Like I say, with the exception of this one is like right around, it's all right. Let's do this. So one of the things I saw, I'm looking down here at the volume. I'm seeing that the volume is right around the 6-period moving average, right? It's right around the 6-period moving average of the volume. All right, hang tight. Let me take this. Oh, I hope I didn't lose you for too long. Let's see. Something what happened to my screen there. All right, so we're going to do that. Now we're going to go over to... No, that shouldn't be it. I don't know why because we have triggers up here. So the triggers up there should have nothing to do with triggers down here. So at what point over here do we get a new value 14? Let's add date to this. And like this, that debugging process, right? This that debugging process is going to help you make sure that you get the right strategy you're looking for. So in here, we are at 12:29 on 23, and this is around 11:43 a.m. So 12:29. Gonna go up, find 12:29. I gotta be faster than that. 12:29. At what time? Around 11:47. Around 11:47. That's the date. That's the time. This is the value. So we got a new value 14 right here. This is at 11:45. So $11:45. Was this candle here? Oh, well, this candle did come down, touch, and moved away. This is not a bear, though. Oh, we got the new value 14. This is assigning this to value 14. It assigned it here because we had a close above the 9-period moving average. Yeah. And within 3 bars of this happening, we did have a bearish candle that dropped down to the 15-period moving average and bounced back up. That's exactly what we wanted to code for. All right. But now here you see that we have that large bearish top wick. So 2 things. One, we took the large bearish top wick out by coding that out. And then when we coded that out, we lost these. All right. So that makes sense. But I could take the coding a step further, and I'm probably not going to do it today because I think I've already made a big accomplishment in just getting this done. But I think the next time I code it, I should say that I should be looking for that overall bearish movement, right? So not just one candle bearish movement, but I should look for the height. I should look for the run. Whatever the height was, if there was a pivot, if there was a swing from high to low, if there was a swing, and see I got the swing values over here. If there was a swing high that then move to a bounce on the 15-period moving average, and within that we had a long range bearish candle, then we want to use this value here as our bouncing range. Okay. All right, let's go over here. Let's undo this. What do we do? All right. I clipped that, but I need to go back and add it in. Pasted that back in, and now I'm going to verify it, and you should see these go away. If I didn't, I messed this up down here. Okay, so now that I've verified, these are gone. Then when I zoom back out, okay, now I got these guys. And again, this is the specific criteria that I was coding for. Okay, but like I said, the next piece I really need to add in is that when the price crosses and maybe closes below that bearish candle that started it, then we got to reset this this entire logic. Close, begin. So we're going to say that if all this happens, then we're going to capture the value of the high. Let's also capture the value of the low, because we're going to use that as our exit criteria. Value 15 is equal to the low of that same candle, which is candle value 13. Okay. All right. And then, so we're going to say if low is less than value 15. So if the low crosses lower than value 15, then two things are going to happen. Well, mainly one thing. Because we just need to ixnay value 14. We don't need to worry about value 15. Okay, lowest value, then so we'll just do that one liner. One value 14 equals 0. Okay, so when we did that, we got rid of a bunch of these. Let's see if we still have the initial area that we're looking for, or did we go crazy around? Okay, we did. All right, and then so it worked here too, right? Whatever we coded for, it did what it was trying to do right in here. Even though this is, oh, this is market open. Okay. All right, wow, look at that. Okay, I need to, because a lot happens in pre-market and after hours too, we need to make sure that we're not capturing these values over in pre-market after hours time. So let's go ahead and do that. So if all these, technically we can get rid of this line because we just use that to help us put our thoughts together. Value 13. So we're calculating value 13 here, but we're doing that all the time. So let's, instead of doing it all the time, let's do if time is greater than 0.935 and time is less than 1550, then you can calculate value 13. All right, so now we verify that. Okay, and so then it was, I think it was trying to calculate value 13 and value 14 based off the bounces during pre-market hours. And so now that we're not using those for our calculations, we don't get this. That's okay. We don't really want that. All right, let's look back at what we have. Make sure that we still have what we were looking for initially. We do. All right, and then we're going to go back to the left-hand side of the screen. Go back left. Okay, we got a potential entry there. Got a potential entry there because it, let's see, what did it do? Okay, so this is where it closed over the 9-period moving average. This candle here, or is it this candle? One candle is where it bounced down. Well, remember, it didn't have to bounce down and touch or be perfectly on the 15-period moving average. It just had to be within a range. So it could be either this candle or this candle, but one of these two candles triggered this to start, right? So, and then once the candle closed, once one of these candles closed below, then it's no longer using this value 1314. But there's a lot of wicking going on right here. So I think some part of the criteria's got to say that there's no huge wicking action. Going on in between. All right, so we're just zooming out. We're going to keep going to the left and see what other kind of madness this specific strategy brings about. Doesn't look like it. All right, now why are we getting this pre-market? Oh, after hours. Because this here is still calculate. This here is still plotting during after hours time. Even though we stop giving values, even though we're only giving values if we're during market hours, it's still plotting after hours. So we have to say if that's between that and time is greater than 0940 and time is less than 1550, then verify. Now we lose those. Don't. We shouldn't have these either here though, so what is this? It's this one that we're working on. Time is, oh, I always do that. Time is less, time is greater than 0940. Okay, there we go. All right, so now we're coming back over here. All right, so we got something there. We got these here. Like I said, I don't expect for this to be a profitable strategy. I just kind of looked at it and I went off on a tangent and wanted to create something from it. So this will be a part of a bigger strategy at some point in the future, I'm sure. But right now, it's not what I see as being, you know, the end all be all. All right, so here you see we got the bounce off the 15 EMA or SMA, and then we have the move above the 9-period moving average. Now when the price is above it, comes back down to within that range as the low, it says take your entry. Okay, boom, took your entry, you made something. Boom, took your entry, you made something. And actually, this would have had to close. So by the time this closed here, you would have got in here. It would have went up a little bit. You might have got it, you know, got out with a little bit of profit. But here, I think over here, we are looking at this is probably your target candle. Comes down within 15-period moving average. 9-period, it moves above the 9-period moving average to closes. And then as it moves above and then it comes back, touches, we get our low within this range. Get our low within that range. Then it takes the it tells you to take your entry. So it worked there too. I mean, so it's not a bad strategy. And I think I've heard people say before, like most strategies, well, I mean, I'm sure there are some bad strategies, but a lot of strategies could work, could be profitable. It just depends on how you trade them. But I do agree that there are some bad strategies, right? Like if you're consistently getting in at the tops, however you manage to find those tops, if you're consistently getting in at the tops and you're trying to go long, that's a bad strategy. That's a bad strategy. All right, so even up here, I mean, there's not a lot of meat left on that bone, right? All right, so continue to go to the left. But at least this strategy is not giving us any entries in a cascading down chart. And that's some of the stuff that I've gotten in the past when I'm only coding for volume or position in relation to a moving average or something like that. When I'm only coding for those things, I may get pretty good entries in other places, but then I'll get some random entries on this downward trend. For instance, watch this. This is one of the strategies that I put together earlier today. This is for the 1 minute time frame. Let's turn that on. It didn't pop up anything, which is cool, but that's because I'm getting better, though. You know what I mean? But there would be some in here. There would be some in here other times, I'm sure. But I am getting better, though. So let's keep going to the left. All right, so going to the left. This must be the bounce here. And this is a wick to the downside. This doesn't give us any viable entries here at all. So question is, do you want to do anything about it right now, Eric? You never want to get in on this candle, right? I mean, that's So we definitely want to say that we don't want to get in if it's a bull, if the close is greater than the open and range is greater than range 7. That's just saying that it's a bullish candle, and it's kind of a long bullish candle. Because at that point, again, you've already given up a lot of your profits if you get in on that on a long candle like that. All right. I guess this is not longer than the average 7-period range, but it's gotta be close. Wait a minute. What is this? Yeah. Let's say, yeah. I don't want to make it too exclusive, because what I could do is I go over here and say that the close has got to be, if the close is greater than the open, can I do not? Can I do not? There we go. So we didn't want that. So it did find that. We don't want that. Okay, so I'm okay with these. Zoom back out. Moving to the left of the chart. Okay, so again, we're kind of finding these bounces. It found that bounce very well. It found that pull back. That's okay. Again, I don't like this bullish candle. So, but this bullish candle, I believe, is less than the 7-period moving average of these candles. And it's got to be, because we said that we don't want the range to be greater than range 7 and it to be a bullish candle. So this must be shorter than the 7-period range. Okay, so I'm okay with all those. These here are, at the top of the move, so none of these are any good. But okay, these help kind of identify that bounce off of that resistance turn supply, right? Resistance turn demand. Okay, but either way, this is just a good exercise, good practice in doing something new. And again, like I said, this wasn't set out to be a profitable, looking for a profitable strategy today. Well, I started to, but I decided that I wanted to try something new, and I got it. So, good deal. All right, guys. Like I said, I'm gonna try not to make all these too long, but I do like to code and I do like to do a lot of this stuff. So, majority of the times when you click onto these links, you probably want to just kind of scroll through or put it on fast forward mode or something like that. Skip to the end, skip toward the end. It doesn't hurt my feelings, but this is, that's the result there. So yeah, I'll be on, tomorrow doing some later. And one of the things I tell you is you typically want to turn these prints off, because if you have multiple charts on at a time, and then you have those prints going on, especially if you have the strategy or the study running on multiple charts, and you have these prints on these print screens, and it's hard to find which one is printing to your screen. So once you get done with those prints, go ahead and turn them off. All right, guys, this is me. I'm Eric. I'm out. Peace.